Hello folks, welcome back to our Forex trading course. Today we begin at Forex Intermediate. Remember, you have already covered our Forex basics. If you have not watched the videos, go back to the channel and watch the Forex basics so that you may be able to catch up with the intermediate section. So with the Forex Intermediate, we are going to begin by looking at what we call price action. And price action is the movement of an asset price plotted over time. This is the graphical representation of a price as it moves over a period of time. So that is what we call price action. And price action enables traders to make trading decisions. This is because price action forms the foundation of technical analysis for all financial securities or assets. So basically, price action is a key aspect or a key concept that you need to understand as a beginner, as a beginner or a Forex trader, because this is where you want to lay your foundation in terms of technical analysis. And when I talk of technical analysis, what is it that I'm talking about? Technical analysis is derived from Charles Dow theory, which was developed in 1990s. I'll leave that to you to go and research further about the Charles Dow theory. And what else you need to understand is that technical analysis is the study of past price movements to anticipate the future movement of prices. Therefore, when we talk of technical analysis, this is whereby as a trader, you go back to the charts, you try to analyze the previous movements of a certain currency pair or a certain asset. And through that analysis, you're able to anticipate or project the future movement of price, whereby now you'll be able to take your entries or you'll be able to execute your trades depending on the outcome of your technical analysis. Technical analysis is best done using chart tools. I'll show you that. Traders study past price movement to help them spot trends and patterns which could help them find some great trading opportunities. So there are various chart patterns that are very key for you as a trader. I will be able to cover that in the Forex Advanced, but some of them, we have things like triangles, wedges, we have Elliott waves, we have what we call the other tools like Fibonacci and all those. Also candlesticks patterns as well. We shall be able to cover them in the intermediate session, which is very critical as well in terms of your analysis. So basically, this is a price action. You can see price action. This is a chart of gold, 15 minutes time frame, and you can see. I know as a new beginner or as a new trader, you might not be able to depict any key information from this, but this is basically to show you how things happen. So you can see here basically these are candlesticks. Okay, the red signify bearish candlesticks, and the green ones show bullish candlesticks. I'll be able to explain that as we move forward. But basically, this is the price action. You can see price is moving up and down, up and down, up and down. Okay. So we have various types of Forex charts, and there are many of them actually, but we are going to concentrate on the three main. That is the line chart, the bar chart, and the candle charts. That's what I'll explain about. But henceforth, as we proceed, I'll be basically dwelling on the candlestick chart, and I will explain why we shall be doing only on the candlestick chart. Okay. So other charts patterns, other charts, Forex charts include horizontal candles, columns, Aiki-Ashi, Renko or Chichi-Renko, line break, range, etc. As I said, there are a couple of them, but let's look at the line chart. So a line chart draws from one closing price to the next, and this shows the general price movement of a currency pair over time. With the line chart, it becomes challenging for a trader to do analysis or to do technical analysis or even to study the price action for you to be able to identify or recognize various chart patterns that you can be able to trade and give you maybe some money. So this is the line chart. As you can see, it's just a line that joins the opening and closing uh, of a certain price of a certain asset. And as you can see, it can become very hectic for you to depict or for you to be able to identify any patterns that are tradable. However, there are some people specialize basically on trading using line charts. Okay? We have bar charts, and with bar charts, they show the open, the high, the low, and the close prices of currency pairs of a particular period of time. The vertical line represents the high and low prices, and we have the left and right horizontal lines, which shows the open and closing prices. So basically, this is how a bar chart looks like. You can see there are various bars. The blue bar or the green bars represent bullish bar, and the red ones represent bearish bar. So we said that the horizontal lines on the left, the horizontal line on the left shows the opening, and the horizontal line on the right shows the closing price. The vertical line, the upper part is the high price, and the lower part is the low price. Okay, as you can see. We have candlestick chart, and a candlestick chart consists of individual candles on a chart. When you talk about a candlestick, it indicates the high, low, open, and closing price of currency pairs, all assets, all securities. So the body indicates the range between the opening and the closing price, and the wicks, or what is all otherwise called shadows, shows the high and the low prices. So these are candlesticks. This is a candlestick chart, and as you can see, this is a candle. This one here, a candle. This is another candle. This is another candle. So they are different. The colors, we put the colors to show the bullish candles and the bearish candle. So it's not necessary that the colors will be green and red like mine, but you can choose your own color. The one to represent green, one to represent bullish candle, and another one to represent bearish candle. I will be able to show you all this when we shall be looking at how to navigate through the trading view or the trading account. Okay, when we shall be setting that, I'll be able to show you. So let's take example of this candlestick here. This one you can see here. So with this candlestick, this is a bearish candlestick, represent sell. Okay. So with this candlestick, you can see there is a body. So this is the body or the real body. So this wick, the upper part, the vertical line you can see on top of the body, we call it a wick or upper shadow. So this here shows the high price of this candle. And then below, we have a vertical line below the body. And this line, we call it the lower wick, the lower shadow or the lower wick. And this shows the low price of this candle. Okay. For you to understand this, let's first look at the advantages of candlestick charts. And one, candlesticks helps to determine the current state of the market at a glance. And uh, this is with the help of color and the length. So when you look at the color, depending on the color that you choose, whether maybe for instance, you can choose green for bullish candle, you can choose red for bearish candle. So the color, when you look at the colors of the candlesticks, depending on how you choose them, you'll be able to determine the current state of the market at a glance. Is it a bullish market or an uptrend market? Is it a bearish market or a sell market? Okay, or a downtrend market. That is, the length of the candle as well speaks a lot. It speaks volume, and this one you'll be able to understand, especially when you look at various types of candlesticks. You'll be able to understand. For instance, we have Marubuzu, we have bearish engulfing, and all those. So don't worry, we shall be able to cover each and every aspect. Then another advantage of candlestick is that it helps identify market patterns quickly. So with the candlesticks, you are able to identify and recognize various market patterns quickly and at ease. So you are not struggling. It's not like the line chart or the bar chart, okay? Then advantage number 3 is that it helps determine the direction of the market more easily. So with the candlesticks, when you look at the candlestick chart, you're able to determine the direction of the market, whether it's a bullish market or whether it's a bearish market, very easily without struggle, without doing even any kind of drawings in your chart. So let's look at the anatomy of candlesticks. And when we talk about the anatomy of candlesticks, this is how candlesticks are formed. And there are 2 types of candlesticks. We have bullish candlestick. We have bearish candlestick. So bullish candlesticks indicates buy, and bearish candlesticks indicate sells. So as you can see here in this chart here that I have given you, this is a typical representation of a candlestick. This is just a candlestick. So as we said, the entire of the rectangle here, you can see this rectangle here. This is the body, okay? This is the body of the candlestick. And on top, we have a vertical line. And this line here, it shows the high price or the high price of this candle. The high that it went before it came down. Then we have the opening price. So this is the opening price here at the end of this body. And then we have the closing price below here. And then we have the low price here. So this vertical line here shows the wick or the lower shadow, and the vertical line on top here is the upper shadow or the wick. So with this one, you can easily interpret how this began. So if this was the opening price, this means that, for instance, this candle opened at this price, then it went up to create the high, then it retraced back, now forming the body, all the way forming the low price, and then it retraced back, close at this price. Okay, so generally, that is the formation of candlestick or anatomy of candlesticks. This shows, as we said, there are 2 types of candlesticks patterns, and with this one, you can see this is a bearish candlestick with the arrow here showing it's decreasing. Then we have bullish candlesticks with the arrow here showing that it's increasing. So the difference in color is also to differentiate, to make you easy to differentiate whether it's a bearish or a bullish. So for me, I chose red to represent bearish, and I chose blue to represent bullish. So like we said, this is the opening price. Therefore, this candle opened at this price, then it went up, create the high price, then it retraced back to the opening price, then started forming the body all the way to the lower wick, or in this lower wick where it formed the low price, and then it retraced back to close at this point. Therefore, you need to understand that the closing price of the previous candle is the opening price of the next candle. So this is the opening price. This was the closing price of this candle. Now this is the closing price of this candle. Now this becomes the opening price of the next candle. And with this one, the price opened at this point, and this is a bullish candle. It opened at this point, it retraced back, creating the lower shadow or the wick to form the low price. Then it retraced back the opening price, started forming the body all the way up here, creating the high price. Then it retraced back to create the upper wick or the upper shadow, and it closed at this point. Therefore, with the candlesticks, you can see it's very easy to follow the movement of price of a particular asset or a particular security or currency pair, and it becomes easier for you as a trader to follow up with the movements of these candlesticks. And the reason why I said we shall be dwelling with the candlesticks charts as we do our analysis and everything henceforth, it's because of the advantages that we saw of the candlesticks patterns. It is easier to recognize chart patterns. It is easier to follow the price movement, and it is easier to recognize the direction of the market at a glance without any struggles. And in our next lesson, we shall be looking at we shall be looking at various candlesticks patterns or various candlesticks, because there are various types of candlesticks. They don't generally form as like these ones. So we have various types of them that you need to understand. Actually, there is a whole PDF, like 300 pages, over 300 pages of candlesticks patterns, and but I will just dilute and give you the best and high probability candlesticks that you need to understand for you to begin making money in Forex trading. Okay. And therefore, now as we go deeper into Forex trading, things start becoming exciting. You start now to know how to do this thing. And with time, I will help you open your demo account. I will help you set up your demo account, set your trading view, and start reading these chart patterns, start reading these candlesticks patterns and identifying them and doing your technical analysis so that you can get started. Thank you so much. I encourage you to like, subscribe, share the link, and see you in the next lesson.